Hello, everybody. It is Monday, April 26th, 2021. We're going to talk about stocks, SPACs in particular, and also small cap stocks. I think that is where the big opportunities are starting to show up right now. First, updated the website yet again. So now you can share things socially. And after a while, if you scroll all the way to the bottom, you get another please share. So I was going to put things over here too, but I just didn't want to put too much. So in any case, if you're in Germany, you can Zing. If you're in Russia, you can, I think it's Qzone. China, you got some Weibo. UK, Telegram. I have no idea what VK is for. I think everything else is pretty much American. If you get to the bottom of the page or you stay for 30 seconds to get this one, these are all pretty much the American ones, including Reddit. In any case, 10 SPAC units near the $10 IPO price. Why do we want to invest in these? It's pretty simple. They have $10 in cash, give or take, minus expenses plus interest, so around 10 bucks a share in cash. And you can buy these around $10 in cash in many cases, which means that your shares are basically backed 100% in cash. Now, pre-deal, that means that if they don't find a deal, you'll end up pretty much getting all your money back plus a little bit of interest. And if they do find a deal, usually there's that hype cycle where people get very excited about the deal and you can take some profits. In most cases, you're probably going to want to sell the warrants because they have time value that works against you over time. So when you get a warrant, much like a long-term call, you have to understand that you're working against the calendar. I know that a lot of you aren't buying these because of the whole I don't know what it is factor, and I get it. But like options, it's worth understanding what they are and how they work, because there is a right way to use these to make money. And pre-deal, which is what we're talking about in this article, if you can get these for about 10 bucks, you have very, very low risk. Now, once they announce a deal, you have to decide, is this a good deal or a bad deal? And a lot of times these will come under a short attack, like we saw with AST Space Mobile, that went down from whatever it was, 18, all the way down to about 7. And now it's bounced back up to 10. As institutional buyers enter the space, as the retail public starts to understand what things are, and as newsletters start talking about these, it's harder and harder to short because now there's more buyers' interest. But there's those small windows when these get attacked right after a deal that if you like the deal, you might want to even buy more. Doesn't usually mean that you just want to bail out. If you can ascertain that the deal is crummy, then simply redeem your units, in which case you'll get all your money back essentially, or almost all your money back on the shares, and you still get to keep the warrants. That's the way it works. That's why you buy the units, because if you decide you don't want the shares, you redeem them upon the deal being announced, and warrants never get redeemed. You get to keep those. So it's a pretty neat way of getting warrants for essentially free. And if the stock price happens to go up above 10 after the deal is announced, now you have a decision to make. Do I want to keep the stock or do I want to keep the warrants? In most cases, I'll keep the stock because the time value doesn't work against me like it will with a warrant. And even though these warrants are 4 and 5 years out, depending on when the deal got made, it's still a calendar working against you. So which ones do I like? I bought ArcLight Clean Transition Corp today. This is one that I talked about 2 weeks ago. And it has some people involved who are pretty connected, including Dr. Lee, who is an advisor to the Biden administration. And they already have one ACTC, which is doing pretty well. So this is involved in renewable energy, energy transition, and sustainability. It's right about $10 a share right now. and you get a 1/5 warrant. So for every 5 shares you buy, every 5 units you buy, you'll get 1 warrant. So they don't do partial warrants. So if you buy 4 units, you won't get a warrant. But every 5th unit that you buy, you get a warrant. Now, if they announce a deal that is crummy, and say the unit price and the stock price both go well under 10, you simply redeem for around 10, basically get your money back, but you still get to keep the warrants. I hope that makes sense. Ares Acquisition Corp, some big time people. And that's what we're looking for. We're looking for big time people, a good sized pile of money so they can affect a legitimate transaction, the right target, and the warrant. Remember, we want the warrant to be low, not high. We want the warrant to be low because we don't want a ton of future dilution. And the U at the end of the symbol, which doesn't always show up on certain platforms, means unit. So you want to buy the unit, not the stock. Don't make that mistake. Buy the unit, not the stock. Again, because you can redeem the shares that are attached to the unit if you don't like the deal that gets announced. Apollo Strategic Growth Capital, APSGU, which is a little tough to get now, so it has split. So there are shares trading and warrants trading, but if you can get APSGU, you want it. Otherwise, I don't know that I would buy this just yet. I really do prefer the units, not the stock. I want the ability to be able to redeem and get warrants for free, essentially, right? Because if we get a whole bunch of warrants for free and most of them go to zero, but a couple of them take off, that's literally, right, dire straits, money for nothing. Doesn't happen very often. That's why you need to buy the units, not the stock. Cone Robbins, FinTech Financial, Fortress Capital, FinTech Financial. This guy is a legend. Vinod Khosla. Do you know who he is? Good. No warrants attached with this one. People are like, well, my gosh, why don't I get free stuff? Because this guy is about as legit as you get. Sun Microsystems, some of the clean energy startups. So when he makes a deal, it's going to be pretty legit. And it's going to be some sort of high margin proprietary technology is what they're aiming for. I would be surprised if he doesn't find something. And Shamath idolizes this guy. So if he does a deal, and this is important to listen to this part, he does a deal and he has to raise a pipe, right? They have to get more money from other investors. Shamath could be one of those people. And what happens when Shamath jumps on? What happens to the share price, right? Probably jump up. Liberty Media Acquisition Corp. I bought this one around 12, and it's down around 10. They're going to make a good deal. I think they might spin off something from a different Liberty holding, maybe Live Nation, in which case they just pay the Liberty Sirius SPAC for Live Nation. We already own the Liberty Sirius SPAC, Liberty Sirius tracker stock. That's not a SPAC. This is a SPAC. So this, buy something from Liberty, and Live Nation would be pretty interesting. MSD Acquisition Corp, some guy named Michael Dell. Again, about as connected as you can get. Only 1/5 of a warrant. Soaring Eagle, they're in talks with Ginkgo Bioworks, which I've been studying. I think this is probably a good deal. Again, there's going to be dilution down the road. So you have to take that into account. So you're looking for some value in these deals that will overcome the dilution. And the dilution is basically just the inverse of whatever the warrants are, plus a little extra for the founder shares and anything that gets stuck into the pipe. 20-30% dilution at some point. So you have to keep that in mind. Now, any deal that gets done, where there's not 20 to 30% value built into it to overcome the dilution, probably a bad deal. And that's what we have to identify. Spartan Acquisition, again, energy sustainability. So you'll notice what I'm looking for. I'm looking for sustainability. I'm looking for tech and media, entertainment, consumer stuff. Biotech is interesting. Tech, fintech, right? All the things that are on our investing barbell. And there's a few others that I put onto the VSL. Actually, I put them into just pre-deals that are worth looking at. I just included the top 10 in this article. In that other article, yeah, there was Guggenheim and a couple of others. But I just picked the 10 that were the best priced. Altimeter was like 13 or 14. I think Guggenheim is right around 10, so you could throw that in here too. But I just stopped at 10. I rank ordered them, and then I threw them in alphabetical order. So these are my 10 favorites. That doesn't mean that they're the only ones that'll go up, but I really like the people involved with a lot of these. The people that are involved are super duper important. So SPAC deals that are post-SPAC include MP Materials, WeWork, which is BOX, Ajax Acquisition, which is going to canoodle with Kazoo, AST Space Mobile, which we know all about, and then two other space picks would be Black Sky and Spire Navsite. I have recently bought both of these. Now, these are all operating companies now. They're in the process of coming public. The deal is done. I think one of these deals could still get shot down. I think WeWork still could get shot down, but I don't think that it will. It's hard to shoot these down. There's not enough public voting to turn these down. I mean, even if everybody redeemed their shares, I mean, you're talking 6, 10, 15% of the shares that are redeemed, because everybody else is part of the private company or the PIPE or the founders, right? The people bringing it public. So the retail side doesn't really have any say. It's like when Exxon tries to force a vote through, it really just depends on if the institutions support them or not. And what, again, interesting is that that's starting to change. The whole world's starting to change now, where institutions aren't uniformly backing management anymore. But in these cases, it's early enough in the day where they control anywhere from 80 to 90% of the votes. So all the deals will get done. Why do we like MP Materials? Pretty simple. Rare earth metals, that's moving back to America. It's going to take several years, but in the short run, they're a monopoly. In the long run, they're part of an oligopoly. We like oligopolies. Nutrient. WeWork. They are at a 75% discount to their peak. They've cut their expenses. Their revenues are still flat. They haven't gone down. In the face of the pandemic, their revenues did not go down, but they slashed their expenses. They're projecting to be profitable next year, and I think they will be, because well over half of their business now, pushing 60%, is enterprise, meaning big companies with leases that last longer than a year. Not some guy who's paying $150 a month on a month-to-month lease for a cubicle. Ajax Acquisition. I actually saw a Carvana truck go right down my street a week or two ago. I think I mentioned it already. So I think this is one where, as long as the price is over 10, I'll take the deal. If the share price is under 10, and I might even miss the deadline already, you might not even be able to redeem these shares anymore. But I think that this probably does pretty well over time. I've looked at the mathematics. Again, is there going to be a little dilution? Sure. In the next year or two, there will be a little dilution. However, there is something bigger out there, and that is the fact that the law of small numbers works for them. They don't have to get a ton of business to be very profitable. So same thing with Carvana, which has gone up substantially. And then these are our space SPACs. AST Space Mobile, which is 5G cell towers in space. Looks like it's going to work, as I've said. Don't bet against the scientists. If there's a finish line to be gotten to, they'll eventually get to it. These two companies are essentially similar. It is reconnaissance and data aggregation and software solutions for companies and governments that need satellite data. The sort of thing that is very scalable, because once you have the data, you can sell it to more and more and more people, much like a subscription service. What do we know about subscription services, right? Very good margins. Revenue can just keep going up and up and up and up and up until there's saturation. And we're nowhere close to that yet. Because the type of data that can be collected from a satellite right now is way better than it was just a couple of years ago, and is at that point where a lot of the things that we see in the movies that we think are sci-fi and don't really exist, it exists. And in many cases, it's better than what the sci-fi guys have been putting out the last few years. So what we see in sci-fi movies in the next several years will be what technologically is reality down the road. At this weird moment in time, a lot of the space technology is suddenly caught up. Now new stories have to be spun for the future, because technology caught up to what we thought the future was. It really is pretty amazing how fast the space technology is moving all of a sudden. But then there's a couple of small caps that I added to the VSL recently. Jumia Technologies, which is kind of a mini Amazon, serving Northern Africa, a little bit of Portugal and Germany and the UAE. This is a favorite of somebody who I greatly respect. I've been waiting for a correction, and we have started to see it. There you go. Peaked up there, got down here. And what I need to do is figure out, okay, this area right here to here, that looks like massive support. So we probably should be starting to nibble on this one and sell puts. Could it come down to here? For sure, it could come down to the lower 20s. But these lower 30s seem to be pretty strong support. And I know some pretty smart people who have been nibbling at this one. Unity, I've talked to you about before. I've talked to you about it in the context of Facebook and Oculus. Again, big run up on Cathie Wood hype. Now her assets have flattened out. So has the stock. So is there more correction left in this one? Maybe. I mean, certainly it could correct more. There's no doubt about it. However, somewhere between the IPO price and where we are, I think the IPO price was like 54 or 58, 60, something. It was in there. It priced and then it repriced. It's much closer to the bottom than it is to the top. But how in the middle is it right now? I'm not sure. But this pattern, right? Big drop, a lot of volatility, then less and less volatility. That usually is the pattern that it follows before it starts to rise again. Hype cycle, despair, slope of acceptance. So Unity is probably something we want. Again, software company, virtual reality, not just games, but in industry, commerce. There's another one of those companies that can create something and then sell it to a lot of people without new inputs. So I like Unity software. I have had an order in at $90 for a while, and it hasn't got there. So I don't know if I have to move my order up or not. One of the things you should keep in mind with this week in particular is that the big tech companies are reporting, probably getting one right now. I don't remember who's reporting today. But the move when the big companies report is generally about 5% in one direction or the other. So if we get a 5% correction, which means people selling and freeing up cash at the top end, they're going to want to redeploy it. Are they going to go right back to Amazon, Google, Facebook, Apple? I don't know. I think the smarter investors are looking in the small cap space right now. The small caps across the board have charts that look like this. SPAC or not a SPAC. AST Space Mobile, right? Really probably should have never gotten much below 10. You know, even if you look at future dilution, but then you have to add revenues in, you know, it really is probably at fair value or slightly undervalued right now. And that's for not getting much done. If this technology works, and I have a hard time thinking it won't, this stock can go to 3 figures pretty easy. This could be a 10 bagger from here. I've seen estimates at, some people saying $300 to $500 stock. I don't want to be crazy, but this is a big deal. This is a company that could have 9 figures of revenue 5 years from now. And of course, I think they'll probably have to redo their deals, so we'll see. But I can see this one spiking up past here and getting well into the 30s and 40s in the not too distant future. So if you don't have AST Space Mobile, sell puts and get a starter position. MP Materials, I've been playing with this chart a lot. I left some things in there. Slope of this line across those levels basically show that there's not a ton of downside here. Can it get down into here for sure? If something cataclysmic happened, could it go way down here? It could. But the reality is that it's probably going to come down. Just like I showed you that chart a few seconds ago, right? Comes down, pops up, comes down, and then it narrows the range. I think we could be at the very start of seeing that happening with MP. I think MP can come down in here again, middle 20s, and I think you got to buy it if you don't own it, or sell puts if you do, or don't. Selling puts, I think, is a great deal if it gets back towards the middle 20s. I suspect it's going to have another one of those consolidation patterns, last months and months, could last to the end of the year, given what's going on with taxes. Then I think you have a much higher price stock. So be patient, but look for your spots at MP Materials. I told people that on Nutrien, and I know a lot of people are like, nah, man, it's not going anywhere. And it ended up going up 50% with a dividend. I don't know when this company would ever have a dividend, probably not for years, but the rare earth metals are a big deal. OX, see? So are you seeing the similarity of these charts? They have their correction, they jitterbug, and I would bet that this range starts to narrow right along this orange line. So anything in here is a pretty good buy price. And again, from a fundamental standpoint, this company generates $500 million in profits next year, which is what they're projecting. All you have to do is start comparing them to Regis. And right now, they're valued about 30% more than Regis. And you have to ask yourself, is that a good thing? And I think the answer is yes, because Regis doesn't have the enterprise business that WeWork has moved towards. And that's an important thing to understand, is that when your customers are giant tech companies who want to have floor space in 10 cities instead of 2, and they want it to be flexible depending on how many people they hire in an area, that's really good for WeWork. Think about the future of recruiting skilled employees. Instead of getting them to move or forcing them to move, you're going to say, hey, we need you to come to the corporate office here and there, annual training, annual meeting, but we have a satellite office in your town now. And by going year-to-year leases with WeWork, they happen to find 50 more good people in that city, they get a little bit more space. If fewer people are working in that city, they get a little less space. So working with the enterprises year to year, rather than guys like me month to month, is a big deal for WeWork. They've gotten rid of pretty much all their dead weight. Got rid of redundant employees, got rid of non-core businesses, negotiated their leases down, got rid of a bunch of properties that they had part ownership in, got rid of a bunch of leases. And they've really, like the gold industry did 5, 6, 7 years ago, they really streamlined and right-sized. And now, think about the deals that WeWork is going to get on space when they need it. With the commercial office space being challenged, WeWork can go in there and say, we'll take a whole floor. What's your best deal? That's your best deal? How about this number instead? Look at the napkin. And then WeWork can create margin when they release it out to whoever, Microsoft, which is, I believe, one of their partners. So that's pretty much what I had today. There's a few more that I want to take a look at. I don't really want to talk about them just yet until I really understand the businesses. I really had to think through WeWork. And I think the thing that the market misses is that they really can cut good deals right now for themselves. If they have a company that says we need some flexible space and WeWork doesn't already have the space, they can go find an office building and say, hey, you've got a bunch of empty floors. We'd like to lease this one, and we'd like you to keep the one above and below empty as long as possible. If you get a deal, you get a deal, but rent from the other direction. Why? Because in a year, we might need more space. And if it's open, that's great. If it's not, we understand, but work with us on this. Because we might get more space from you if you're not a jerk. I really like the WeWork deal. I think that one's going to double or triple. I think it has ultimate cap on how high it can go. I don't think it has the upside of Unity or any of these that have more subscription-based models. I think from the standpoint of real estate, I just think it's an undervalued opportunity to roughly triple your money in 3, 4, 5 years. Somebody asked about EOSE. I don't know anything about these guys. Sorry. I will say something about zinc batteries. I'm very familiar with those because there is a zinc battery company, flow battery company in Milwaukee, and it still exists in some form. As I've said, batteries for buildings don't have to be small like batteries for cars. So technologies that are lighter in lithium and other rare earth metals are likely to work because you don't have the space constraints. I haven't studied this, but what I would say is that if the technology works, and just by glancing at the 100 links that just popped up for me, it looks like the technology does work. So all you have to do is a mathematical calculation as to whether the company is undervalued based on EV to EBIT, more traditional price to earnings ratios. What does the free cash flow look like? How does the debt look? I just will caution you that anything that's an asset-heavy model, you have to be extra careful with. Asset-heavy being companies that require a lot of inputs to get output, where when you make a widget, you get paid, versus commerce that's based on information, where the information can be resold over and over and over again. All right, any other questions? No? All right. Dog wants to go down and see what's going on, don't you? All right, I will get this published, and I will finish these articles all up tonight. I got a few more companies to add. I just want to finish footnoting them for myself. But I think the ones that we covered today, in particular, these 6, I think these are all worth 1% positions. I have 2% here. I have 1% in all these other ones. And all I'm really looking for right now is whether or not there'll be a short attack where I need to add. And these, if you have speculative money that really doesn't look like a speculation when you have a hard time actually losing money. You might break about even on most of these, but a couple of them will do well. And I'll tell you what, if I had to pick one, this is the one I would pick. I would pick Kozla. I just think that it's almost impossible for him not to get a good deal. And I really think Shamath will jump in on the deal if he's given the opportunity. In which case, right, the Reddit army gets behind you. With these fintech ones, tell you what, the Cone Robbins is very highly owned by hedge funds, Fortress Capital too. These fintech ones are pretty interesting. Fortress Capital has the better structure. Gary Cohen is one of the most connected men on earth. My guess is that you would trade the Cohen, ride the rally up, and then dump most of it. And at Fortress, you're going to want to have a long-term position. Because this guy, he doesn't lose. Just one of those people. The people that I have here are all basically sharks. So here's where we can put the sharks on our side. And then I think Kozla is just, I think he's in a league of his own. Look up Vinod Kozla if you don't know who he is. All right. Have a good night.